Good morning, good evening, good afternoon, everybody. Welcome to the Finance Rebel Show. I am Kamar Yellis, the Finance Rebel, and today we're going to do something a little bit different, or something I haven't done in quite some time. We're going to do a weekly review, a financial weekly review. So if you know anybody who is looking to increase their financial IQ, be sure to share this broadcast with them, because I'm always here to help. I'm always here to help folks understand the markets better. I'm always here to help folks understand taxes better. I'm always here to help folks just overall increase their overall financial education and knowledge. So be sure to share this. So today we're going to talk about a couple of things. We're going to do an overview of the markets and the economy. Also, there's some tax updates I want to talk about, some political updates I want to talk about, and maybe take a couple questions towards the end if we get a chance. So as usual, I'm broadcasting live on IG, I'm broadcasting live on Facebook, and I'm broadcasting live on YouTube. So give me 1 second. I'm just going to share this out. Hey, Lynette, how you doing? Happy Saturday. Hopefully, since this is the financial review, y'all reviewed y'all money for the week. Look at y'all budgets. Are being good stewards of your money and all that good stuff. Don't let me down. Don't let me down. Please tell me everybody's being a good steward. All right, so like I said, we're going to talk about the economy, talk about some of the updates in the markets. I'm trying to share this broadcast out, but Facebook does not want to cooperate with me. So I guess I'm going to have to wrap that up. Maybe not. Let's see. No, it's not cooperating with me. So somebody do me a favor. Can y'all share this out for me on my page and into the Finance Rebel Academy? I don't know why this is giving me such a hard time. But the show must go on. The show must go on. All right. So listen. Today is the 25th. It's an important date. There are some deadlines coming up that are actually today that a lot of people are really, really confused about. And we're going to talk about those as it relates to unemployment. Like I said, we're going to cover the markets a little bit, and we're going to talk about taxes. All right. So this week, Dow Jones ended the week at 26,469. It was down for the week a negative 7.6%. Again, it was down 7.6% for the week, and the Dow Jones is actually down 7.25% year to date. All right, the S&P 500 closed the week at $3,215, down about 1/4 point on the week, and it's down about 1/2 percentage point year to date. Okay, the NASDAQ closed at 10,363. Again, 10,363. For the week, it was down 1.33%. Year to date, however, it's up 15.5%. And you might be asking yourself, well, why is the NASDAQ up? The Dow Jones is down and the S&P 500 is down. Simply because the NASDAQ composite is made up of mostly technology stocks. All right, it's mostly made up of technology stocks. And so technology stocks have really kicked butt after the big dip in March. It came back really hard. So companies like Apple, Netflix, Amazon, Google, they've all basically come back. And so the NASDAQ is heavily weighted towards technology. That's why you're seeing the NASDAQ do really well. All right, oil closed at $43.34. Again, down for the year. However, it's bounced back up from that that catastrophic fall when they were pricing at below $1. So it's come back. And the last commodity I want to talk about for right now is gold, right? So I know all my gold bugs are happy right now. All my gold bugs are dancing in the streets like David in the Bible, because gold right now is at 1902. It is up 27% year to date. Gold is kicking butt right now. Gold is kicking butt because of all the uncertainty that's going on in the world right now, along with these packages that the government is rolling out, the stimulus packages, the $3 trillion that they rolled out, along with what they have going on right now, the potential further packages that are coming out. So right now, gold is kicking butt. It's at an all-time high. Gold has never been this high before, but I am not certain if gold will continue to keep climbing like this. But I think there is some time coming down. No, Miss Edith, you're perfectly fine. I had a couple technical difficulties, and so I'm here a little later. And I think I'm going to change up a few things going forward. I think I'm going to start doing these financial reviews every week, just to talk about the market overall, the economy overall, because all of those things are important. Some of the big stories and my take on some of these things going forward. All right. Now, unemployment is still 13%. Unemployment is still 13%. And sad news is, right, the federal unemployment incentive, or the federal unemployment assistance, right, they call it the PUA, that is discontinuing this week because the Democrats and the Republicans on the Hill can't get their stuff together. So they can't figure it out. They can't get their act together. As always, there's always some contention there. All right. But the confusion is, in the original legislation, it said it would end at the end of July 30th. However, that's not the case in most states. The last check, the last $600 check, is going to end today. All right. So this will be the last week you can claim it for, to be clear. All right. So make sure if you are on unemployment, or you know somebody that's on unemployment, make sure they file so they can make sure to get that last $600 payment. Now, they're talking about bringing it back. They're talking about extending it. Again, the Democrats want to extend it. They want to extend the $600. The Republicans want to reduce it. Kind of typical, right? The Republicans are talking about trying to introduce some kind of formula-based equation to get money going forward at like 60%. The Democrats want to keep it at 600. There's also been talk about 400. There's also been talk about maybe a $200. Now, keep in mind, the regular state unemployment benefits, if you are on, are still ongoing. It is only the federal portion of the financial unemployment insurance that is going to stop again. All right. The $600 that you were getting extra from the federal government through unemployment, that is going to stop. However, unemployment overall, your base unemployment, if you are on unemployment, will continue to go on. Again, like I said, it's a mad dash in Washington amongst Congress. It's always like it's romper room, kindergarten down there. There's no adults in the room. The Democrats and the Republicans can't figure it out. However, there are also some other things that are going on that I wanted to talk about as well. And I wanted to bring up an article that I was looking at that talks about a lot of other things. For example, the eviction, like if you're a renter, the eviction moratorium, that's going to be over too. So you have the combination of people not being able to get that $600 benefit and the moratorium of rents going away. So that's kind of scary. That's kind of scary, but let's look at it. Let's break it down. And I'm going to try to share this one more time, but it ain't working, folks. It ain't working. Nobody's showing me love. I don't know what's going on today, but it's all good. So let's hop into this real quick. So this is a Forbes article. And for my folks on IG, I apologize. You know what? Let me see something. Maybe I can share it. Is that better? How do y'all like that? I've been saying I was going to try that out. So for my people on IG, I'm just sharing the screen with you. So Forbes ran an article, eviction bans and student loan forbearance. Here's what the key benefits of the CARES Act expire. So we have a lot of things expiring right now. All right, so a moratorium on evictions for renters living in homes with federally backed mortgages. Okay. Again, a moratorium on evictions for renters living in homes with federally backed mortgages. So a lot of times, many of our mortgages are backed by the VA or FHA. They had a moratorium that expires today. It expires today. Landlords are still required to give 30 days notice before beginning eviction proceedings. All right. A moratorium on foreclosures for buildings with federally backed mortgages won't expire, however, until August 31st, right? So mortgage or federally backed mortgages won't expire until August 31st. So that gives landlords a little bit of leeway, a little bit of time, okay? This is what I was just talking about. Expanded federal unemployment benefits, that extra $600 will expire on July 31st. However, but the last payments will go out July 25th or July 26th. So remember, you have to apply for your unemployment this week to make sure you get that last payment. The Pandemic Unemployment Assistance Program, which provides federal aid for freelancers and independent contractors not eligible for standard unemployment insurance, will continue until December 31st, right? So if you are an independent contractor and you couldn't do it anymore, if you were driving Uber, you were doing Lyft, you were doing Instacart, you were doing Grubhub and things like that, you will still get your unemployment. However, you won't get that extra $600 again, all right? Automatic forbearance for federal student loans. Okay, not the private loans, but the student loans will not end will end on September 30th. So you got until September 30th for the forbearance on federal student loans. All right. And penalty-free early withdrawals of up to $100,000 from 401ks, IRAs, and other eligible retirement accounts are allowed through December 31st. So for right now, they are not going to penalize anyone pulling money out of retirement account who's under the age of 59 and a half until December 31st, and required minimum distributions are suspended for this year. So what are required minimum distributions? So required minimum distributions, right? RMDs. That's when you are 70 and a half and you have to, what is that? Oh, I'm blocking myself. They are payments that you have to take if you have a IRA. So if you have an IRA, you're over 70 and a half, you have to take money out of your IRA. They make you do it, or your 401k. All right. So those are some things many of us don't think about when we are going through our financial planning and all of that. So I just wanted to make everybody abreast of that. Let me know if y'all got questions. Just want to say hello to Born to Free, Black Gold 01, Shiny's Enterprises, Bria Dad 711, the Kaizen Investor Asia, and Coach Al. How y'all doing? Or Coach Al D. How you doing? Shamice is here. Miss Edith is here. Curtis Davis is here. How y'all doing today? How is everybody? All right. So listen, tell y'all folks, get prepared. If this is your last unemployment check, don't try to trick it off at the club, folks. That's not a great idea. All right. Try to conserve. Try to keep some money in savings in the stash. Only pay for your essentials. And just be, again, be conservative. Now is the time to be conservative. Now is not the time to go all in. How you doing? Go CP&G. How you been? I ain't seen you in a minute. Miss Edith share. Thank you, Miss Edith. For some reason, I cannot share my screen on Facebook. But oh well. Who's here is here. Who's meant to get it will get it. And those who aren't, maybe they'll get it later. Maybe they'll watch the replay. So that's all good. That's all good. So here's the other things, right? So last week, not September. What month am I in? Last week, July 15th was the tax deadline. Remember, tax deadline got extended from April 15th because of COVID. It was extended to July 15th. I know a lot of people have still not filed. Why do I know that? Because the IRS has reported that they still have refunds, or refund levels have not equaled to more, refunds have not equaled more than what they were last year. So Lola, I will come to that question in 1 second. So, again, file your taxes. So if you missed filing your taxes on July 15th, be careful, because you could potentially get a late filing penalty, right? And a late payment penalty. Hopefully you all who didn't have an opportunity to filed an extension. But again, if you didn't, I would advise you all to file as soon as possible, especially if you think you owe. All right. Now, the late filing penalty is based on how much money you owe the IRS. It's like 0.05% or something like that. And that accrues over time. Now, if you don't owe the IRS, you're okay. But if you are getting a refund, apply, file, because you don't want the IRS just holding your money. Also, the IRS is sending out interest payments for those folks who had refunds that between the periods of April 15th until July 15th. So they paid some interest on that because the time got delayed and the government got the whole year of money longer than what they should have. All right. So just keep that in mind. Keep that in mind. You want to make sure that you get all your money and you file your taxes on time. Last thing about taxes. We need to be very, very intentional about our taxes. We need to be very, very intentional about trying to pay the least amount of money in taxes, because we get ripped off. Federal wage tax, state wage tax, city wage tax, all other kind of taxes that we have to pay, whether it be sales tax, real estate tax, all of those taxes oftentimes can equal up to more than 50% of your overall income. So at the end of the day, a lot of times we think, well, what in the world are we working for? Just to pay taxes, and basically just to let the Republicans and Democrats fight it out in Congress, and you don't wind up getting anything, or you don't get it in a timely fashion. But that's a whole other conversation. All right. So again, be proactive, be aggressive, be assertive when it comes to your tax planning, when it comes to getting your taxes filed. All right. So I'm going to take a couple questions real quick. Mr. Davis says, good afternoon. I say good afternoon back. Go CP&G says, good day all. I say good day back. Okay, Ms. Edith shared. Thank you. And Lola says, what investments will you suggest to help us grow what we have coming in? Well, I think the stock market is probably the easiest way to invest, right? You can invest with $1. You only need $1. You can do fractional investing, which is a game changer right now. The gatekeepers are gone. Years ago, you needed $10,000, $20,000. Had to sit down with a white guy with a Brooks Brothers suit, a gray suit with a black tie on and a white shirt. You don't have to do that anymore. You have the opportunity to sit down and use your phone. I'm using my phone to broadcast live on IG, so I can't show you my phone. But again, you could take $5 a week, $10 a week, $20 a week, or whatever you can afford and start investing. Now, I would be very cavalier if I don't say this. You also need to save. You also be very, 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 very intentional about savings, right? You need a rainy day fund. Okay, so you can invest and save at the same time. I don't have a problem with that. But what I'm seeing nowadays is that people are trying to say that you don't need to save because the banks aren't paying any money. And last night when I was on, I was explaining about different risk reward scenarios, or what kind of risk you should understand about whatever investments you're getting into, right? Because cash, which we all need, for the most part, doesn't have any risk. Whether it's under your mattress or in the bank, nobody's really coming to get your cash. Now, obviously, if we have something really crazy like aliens coming to invade, you might not be able to get to your cash. But the probability of that happening right now is relatively slim. All right. So you need your cash, you need your rainy day fund, you need your opportunity fund too, right? You need money on the side to be able to take advantage of opportunities that may come across your path in the future. And you also need your investments. You need your investments to grow, to beat inflation, right? And if you don't know what inflation is basically just the rise of prices and services over time. If you remember 20 years ago, a loaf of bread is not as expensive as it is right now, or was not expensive as it is right now. Gasoline was not as expensive. Clothing was not as expensive 20 years ago as it is now. So, you want to be able to make sure that your investments are able to beat those overall costs. And inflation comes in about 2%. Now, I think some of the big talking heads talk more about inflation and give more credence to inflation than it actually deserves, because I think a lot of us are still operating off the old economic model before the global economy came on board, before outsourcing, before we were getting a lot of our stuff from, let's say, China, right? Or Taiwan or Vietnam or Pakistan. So that helps to keep pricing down. But nevertheless, inflation is still real. So you want to start looking at things. But Lola, again, to answer your question, I would look at stocks. I would start, hopefully you have at least $1,000 in your savings, all right, or at least working towards that. And then you're looking at stocks. I would say invest in what start there. What's your favorite thing to buy? I know you're on YouTube. I think you got a podcast coming too, or have one out already. I'm not sure. But look at some of the things that you buy a lot. What kind of sneakers do you like? What kind of phone do you have? What kind of clothes do you buy routinely? Where do you shop? Are you a Target shopper, or do you like Walmart? What supermarkets do you go to? Do you go to Giant? Do you go to Acme? Do you go to Whole Foods? Right? So look at all those things and then figure out which ones you really like. Figure out the ones you think will have ongoing value, which ones have the best businesses. Because remember, an investment is actually a piece of a business. I'm talking about the stock market. I'm not sure if you were interested in gold or not, because I brought up gold. For most people that usually attend my lives, I struggle. I don't really think there's an overall need for them to start investing in gold, but it's not a bad thing. But it's all depending on what you're doing, what your goal is, how long you have to invest, and what you are investing for. Are you investing for retirement? Are you investing for college planning for your children or a loved one? Are you investing to go, on this wonderful exotic excursion around the world in 20 years? So it just depends. So Lynette, I can't see IG. I was just trying to share my Facebook video on my page, my Financial Rebel page. By the way, if y'all not following the Financial Rebel page on Facebook, please do. but I couldn't share it. I don't know why. I have my iPad over here as well. I use that to look up stuff, and it ain't working for me, folks. It ain't working. Okay, so go CPNG asks, when it comes to learning finance, should we pump schools to teach it or teach it to them ourselves? And what subjects? So I'm biased, right? I am very biased. Lynette, Lil Mama, I'm coming to you in a minute. I'm biased. I went to school for finance. I went to Temple University. I could have went anywhere, but I chose Temple. I'm pretty sure most of y'all don't remember that commercial. So I think you should learn in school. However, school isn't just school, right? So what I mean by that is there's a lot of free resources that are out there. Matter of fact, I've been meaning to put together like a guy. What's up, Corey? Shout out to Corey from By the Hood. Everybody check out By the Hood. It's a great podcast. It's great because I've been on there twice. But no, in all seriousness, it's a great podcast. It's a great show. Those are great guys. Corey and Jimmy are my guys. But I think we should learn from a formal situation because they tend to be squarely invested in teaching. Now, some of y'all might not like me for this. There's a lot of scam artists going on out here. There's a lot of people out here perpetrating fraud. I'm showing my age right now by making that statement. There's just a lot of people that's cap. That's what y'all young folks like to say these days. So I do like the formal school, and there's a great finance course on the iTunes University with Dr. Robert Shiller. Y'all might not be familiar with Robert Shiller, but Shiller is responsible for the Shiller Index, which tracks real estate and commercial cities. But he's got a whole thing on there, and it's free. iTunes University, and it's a Yale course, right? So I like for you folks to go to those things, and you can look at some of the other people out here that have courses, right? So I mean, everybody's not a scammer, but I'm just scam sensitive right now, I guess, because there's just so much of it, and I'm very sensitive right now to a lot of people that hold themselves out as advisors and they give trash recommendations and trash advice. And there's no other way I could put that. I'm not going to say names. However, there's a lot of trash people out here. Shoot, somebody probably thinks I'm trash, and I'm cool with that because my intentions are pure. But again, I think you go look to some of the formal institutions, right? Especially those with all this Khan Academy, all this iTunes University. They're tapping into established institutions that all they want to do is share the knowledge, right? You can get that. And then if you have some people that you enjoy, that you trust, you can do theirs as well, right? You can do this as well. You can do both. Just like you can go to college, right? And it's okay to go to college, but your learning doesn't stop just in college. You should be a lifelong learner. So once you graduate, once you put on your cap and gown, that's not when your education stops. It should keep going to the day you die. You should learn something new every single day. So I hope I answered your question. Go CPNG. Now, Lynette Lil Mama, and Corey's going to laugh at this if he's still on. Lynette Lil Mama said, what do you think about non-profitable Tesla? Well, you just said it. It's non-profitable, right? It's non-profitable. It's almost like a non-profit. Some people get mad at me sometimes, and I say I won't touch it. Tesla is a great case study to show when the market is disconnected from overall fundamentals. So the market has been pumped up, loves Elon Musk, been pumped up, and they believe that Tesla is going to be able to do some things. They see Tesla as more than a car company. They see Tesla as like the next generation Black Jesus. So I get it. People want to get in, they want to get in early. But Tesla right now is like 200 times earnings, or the PE, price to earnings ratio. Look that up. That's homework for y'all. Look up PE and come back and y'all tell me what that is. But it's 200 times earnings. It's not profitable. It's been pumped up. Elon Musk is totally reckless. He says crazy stuff all the time and get him in trouble. And basically, Tesla, while it has a lot of smart people there, what happens to Tesla if Elon Musk goes away? I don't think it has the same shine and luster. It does not. So with him being so reckless, I wouldn't be surprised if the SEC censored him at one point or at some point and possibly made him do some things that he won't like. All right, so Dr. Hodges Photo, how are you? Who else joined? That's it. Kevin Key, how are you? Kevin, when we doing our thing, Kevin's my buddy. We're supposed to be doing a duo. We always argue. It's like David and Goliath. Kevin's like 6'7", 350 pounds, and I'm like 5'2", 150 pounds soaking wet. So he likes to bully me, y'all. I'm joking. I'm exaggerating. Kevin's my bro, but we do argue all the time. So yeah, I am not a fan of Tesla. What is Tesla at right now? I mean, listen, if you caught a trade, let me say this. I am not a long-term investment fan of Tesla. If you want to trade around Tesla, rock out. Who knows where it's going, but rock out. I'm actually starting to like, or I don't want to say like, because I don't want to give y'all the wrong impression. I am starting to really get interested in that Nikola or Nikolai, the hydrogen truck company. I've been reading a little bit on it and starting to do a deep dive. But Tesla right now is 14.17. Crazy numbers. Crazy numbers. So let's pull that up. Let's pull that up. Tesla's 14.17. A couple months ago. And all right, let's go to December of 2019. It was like $275. It was $276 on December 31st of 2019. Right now, it's 14.17. But however, here's a lesson, right? And I'm gonna keep repeating this over and over and over, right? A lot of people were panicking when the market fell in March. I told you I don't panic. Tesla went to 368. It was still up on the year, right? And I've already told you I'm not a quote unquote Tesla fan. However, the market is the market. The game is the game. So what were we at? I'm sorry. So Tesla was 418. I'm sorry. I gave you all the wrong number. 415, December 31st. All right. 2019. And then in March 18th, it was 361. All right. So it fell year to date. A lot of people panicked. A lot of people sold. Now Tesla hit a high of almost 1,600. It's almost as much as gold. Right. And now it is 14.17. Just imagine if you would have brought Tesla on the dip. You know the saying, when there's blood on the street, there's time to buy. I have to get a new chair. I actually just ordered it. Hopefully y'all get it by Wednesday before the next Wealthy Wednesday. I guess I'm too fat because it always just scoops down on me. But Tesla is 14.17. Right. And so one exercise I would suggest all y'all do is to go back through history, look at stock prices, and don't just do it for a year. Look at the patterns. Right. So go back to 2008. Matter of fact, I'll do it for you. I will do it for you. So I want to look at the S&P, right? S&P 500, which you can capture in SPY, which is the ETF, right? Remember, I like ETFs more than I like mutual funds. Now, Corey just said he won't touch Tesla, right? I think me and Corey have a contest to say anytime who says trash first anytime Tesla comes up. So, he won't touch it. He believes it's overpriced as well. So when you look at Tesla, it's just crazy. But let's look at SPY. And pulling up the chart, and I want to share the screen with you all so you all can see it. Now, I don't know how well or how good you can see that, but right now, SPY is, oops, wrong one. All right, I'm looking at that thing. SPY is an ETF. $320 right now. Now, right now, I have it on what's called a daily chart. So each one of these bars, which they call candlesticks, represents a day's pricing. So when we're going back and we want to do historical look backs, it's best to switch to a monthly chart. The monthly chart will represent the bumps a little bit better, and it smooths out data because you don't see the short term jumps and falls. All right. So right now, if you can see my crosshairs, we're looking at March 20th, right? When we saw this big fall. SPY hit a low of 218. Now I told you it's at 320. So it's already come back roughly $98, roughly. And that's just in the last couple of months. Now, but when you look back in time, just look at some of the dips, right? And if you go here, this is August 11th. There was a little dip there. All right. So this dip right here, and by the way, these red and blue bars, red and green bars underneath represents volume. We'll talk about volume at some point as it plays, but right now, just look at these bars right here. So SPY, again, which is a representative of the S&P 500, was at $157 in October of 2007. So that was roughly about when the Great Recession started, when we started having problems with some of the banks, especially some of the mortgages. A lot of things started to go wrong. All right, so when you look at that, again, as a matter of fact, for my IG people, I'm going to show you the screen again. Let's see the screen again. Let me know how y'all like that. And Kevin, yeah, we could try to do something today. So it hit a high. This was a high back then, October of 2007. And then from there, it started to fall. Right? So now so October was a crazy month. I'll never forget October because I was working at an institutional firm and we couldn't get any pricing. Now, by that time, we had already went to cash for a lot of our clients. And it kept falling now. Kept falling. People were going crazy. Some of the client conversations I had or had to have during that time were absolutely bananas. Some of them made me sick to my stomach. But we got to March. And when we got to March, I want to say March 9th, we saw a low in the market, right? But it only lasted, that down drop only lasted for about a year. And then from there, it bounced, right? You can go back and do even more history and look at it on other stocks and other stocks positions, right? Nothing is forever. So I tell people to study the market because if you're really serious about investing, you need to understand that the stock market is probably the perfect reflection of human emotions. And what do I mean by that? People buy stocks when they're trying to be greedy and they sell usually when they're scared. They buy when they're greedy. They're trying to be greedy, and they sell when they're scared. And so even when you look at the stock market right now, a lot of people are still being greedy. When you look at gold right now, again, it's at all-time high. People are still buying. People are being greedy. They want to rush in. There's a saying that used to go when when my shoe shine person or my shoe boy starts to give me stock advice, it's time to get out of the market. I'm seeing a lot of that right now. So, but again, go back and study the market, study the highs and lows, see what events corresponded with them, right? Go back and look at Black Monday in 87. Look at the stock market crash, and I won't call it a crash, but the fallout in 2001. Look at all these other events. Look at the SNL crisis, savings and loans crisis for everybody. Look at all those things. There's a lot of value there. So Lola, why do I like ETFs more than I like mutual funds? I like ETFs more than I like mutual funds because ETFs are kind of like the cousins of mutual funds, right? They're both baskets. They both hold various asset classes, stocks, bonds, commodities, currencies. ETFs have better taxation or better tax treatment. Y'all know I'm big on trying to reduce your tax liability overall. ETFs have better pricing or better transparency or better liquidity. They actually have all of those, but better liquidity as well. And I think I talked about this last night also. I can find out the price of my ETF any day that it trades, 9:30 to 4 p.m. All right. With a mutual fund, I don't really get the pricing until the end of the day, around 6 o'clock. I can trade in and out of an ETF anytime through those times between 9:30 and 4:30. And 4 p.m. Now, for all of y'all slick folks, yes, there's a pre-market and there's an aftermarket. I strongly advise you to stay away from trading or investing during those times because a lot of people get hurt on some of the pricing during those times. All right. So Airbnb is protected or projected to go public this year or next. Would you invest in them considering how bad the travel hospitality has been hit? I would be shocked if Airbnb actually went through on an IPO. I would be seriously shocked if they went through on an IPO. But, nothing's impossible. I would have to dig into the company a little bit more. As it stands right now, I probably would not touch Airbnb. There's a lot of people getting hurt. A lot of people did a lot of subletting, right? They went and rented an apartment just so they could put it on Airbnb. And then they duplicated that over and over again. And they thought everything was always going to go up and it was never going to be a problem. But now people are either one, looking at being evicted, or two, potentially getting foreclosed on. Because, a lot of people think when it's sweet, just keep doing more and more and more. Nobody ever thinks about the risk or the downside of things. That's one way you can know a scammer. When a person only shows you the upside, the good part, it's simply a problem, right? If you only see a lady with her makeup on and never without her makeup off, like just totally bare and innocent and open to the world, there's an issue. All right. And that's an analogy. I'm not judging anybody for wearing or not wearing makeup. Edith Richards says, yes, perpetrating the fraud. Yes, I'm old school as well. Yeah. But Edith, I spent a lot of time in the Bronx. So I probably got it from my New York family. So, all right, folks, I've been on longer than I anticipated. If anybody has any questions, throw it in now. But I'm going to begin to wrap up. Hopefully everybody got some value out of this. What I would like you all to do is do me a favor. I'm a new podcast, The Financial Rebel Podcast. It's on Apple, it's on Stitcher, it's on Google, It's even on Spotify. And matter of fact, my my media host where I put my podcast up just told me to even share it on Apple Music. I didn't realize Apple Music was hosting podcasts, but now they're going to have podcasts as well. So I'm on episode 11. I have a bunch of other episodes that are already complete, ready to go up. Just trying to figure out in what order I'm going to put them up. And you'll start to hear some of these sessions up in the podcast too. So if you can't make these sessions, you'll be able to ride along and listen to the podcast when you're in your walk or run, working out, in the car, whatever it may be. You can take me everywhere. You can be like besties, like new BFFs, right? So again, do me a favor. Listen to the Finance Rebel Show, the podcast. Rate, subscribe. I got 2 ratings, y'all. Y'all supposed to love me. Don't y'all love me? I got 2 ratings. So do me a favor. Go rate it. Go listen to it, right? Give it an honest review, right? And also give it an honest rating. All right? So until the next time, y'all know I'll be back Wednesday at 8 p.m. Don't forget about Wealthy Wednesdays. I'm here 8 p.m. every Wednesday answering your questions. Be well. Everybody be well. Enjoy your weekend and don't work too hard. See y'all later. Thanks for joining. And I'm honored that everybody joined me today. Again, have a great day. Kamar Yellows out. Bye-bye.